You didn't ask for it, but today's video will reveal my entire investment portfolio. What's up guys, it's Avery here. My investment portfolio mainly contains cryptocurrency, stocks, as well as real estate. And if you're new, my channel typically follows those three topics with more of an emphasis on investing in real estate. And if that sounds cool to you and you enjoy me being transparent about my finances, make sure you stick through the end of the video and let's find out how rich I am. Okay, so majority of today's video, I'm gonna be on my computer here, just looking over the specific accounts that I have. And I'm gonna go in order from smallest to the biggest assets that I have. And that first one would be cryptocurrency. So if we hop right into my computer, we're right now looking at my BlockFi account. And I have around $19,000, almost $20,000 worth of cryptocurrency, which is a pretty decent amount. It's definitely not the most amount of money that I've wanted to put into my assets, but it's been pretty fun so far. And I definitely recommend, if you're going to buy some cryptocurrency, to make sure that you can use one of these accounts that you earn some interest. So I mainly have Bitcoin as well as Ethereum, definitely more Ethereum than Bitcoin. And if we look in here in the interest account, I've earned a little bit of interest on the amount of Bitcoin and Ethereum that I have. You can see here my Bitcoin balance is very small. I own a very little amount of Bitcoin, and it's mainly in Ethereum, which has increased a lot in value, as well as I've received a lot of interest from my Ethereum. So it's been a pretty cool investment so far, and probably one that I will leave alone, not really touch, and just have it continue to go up. As well as I haven't really bought much more Bitcoin and cryptocurrencies and Ethereum since I first purchased it. I mainly just had that initial buy back in the beginning of 2021. And I've kind of just let it grow and have that interest, and I'll probably just leave it in for a very long time. That's the first part of my investment portfolio, and if you want to learn more about investing in cryptocurrency and how you can get this interest, make sure you check out the video up here where I go over how you can set up these accounts and how you can make some money utilizing what's known as a hot wallet. Next, we'll go over to my basic brokerage account using Vanguard. Okay, over here we are on my Vanguard account, and of course in the time that I set this video up, made all these tabs, it logged me out of Vanguard and I had to go over and get my phone, but whatever, you're not seeing any of that. I cut that all out of the video footage. But here we are, and I know I am going to get some flack for this, especially being a personal finance channel. When I first started investing with Vanguard, I opened a taxable brokerage account. I did not take advantage of the Roth IRA right away. This is actually the first year that I've started investing in that Roth IRA, and I'm going to completely max it out with that $6,000 amount. And with that Roth IRA, you just have a lot more tax advantages because you're taxed at the time that you put it in. But any transactions, as well as once you sell, you no longer pay any more tax. But with a taxable brokerage account, you always are paying tax on any transactions or withdrawals. So you can see here my total balance of $37,000, which is pretty decent. In the last couple of years, there's been a lot of really solid gains. And again, you can see my brokerage account is a majority of that, and my Roth IRA is a smaller amount, and I'm going to get that to the max amount of $1,200. And we can dig in a little bit more and check out the holdings that I have. So my holdings in my brokerage account that is almost at $36,000 are basically just 3 ETFs and some high dividend yield ETFs, as well as total stock market ETFs. And with these Vanguard accounts, I really don't do any thinking or analyzing. I am just dollar cost averaging into these specific total market ETFs, as well as some that have some higher dividend yields so that I can get some payout. I'm not really doing too much thinking. This is my most passive investing along with my cryptocurrency. See here, I mainly have VTI, which I really like as an investment because it just follows the total stock market, and I'm basically just betting on the US economy increasing, which I feel like is a pretty safe bet over the course of my lifetime. So those are the 3 things that I'm holding in my brokerage account. And if we go down to my IRA, I am holding fairly similar stuff. I have a little bit of an Apple account going on here just because it's a blue chip stock. I feel like that's a pretty safe stock, but that's pretty much it when it comes to my stock investing. Not on Robinhood or any other platforms. I like just using Vanguard. I feel pretty good about it. And this is really what I'm doing. I'm not really thinking too much about what I'm purchasing. I just have my money automatically go from my checking into this investment account, and I make purchases about once a month. The first property that I'm gonna go over would be my 3-family, which was the second rental property that I purchased. I did this using an FHA loan, did the house hacking strategy, which I've talked about before on my channel, and really helped me a lot and catapult my wealth forward. If you're interested in learning about that, put the video up here. Really great strategy to pay no rent and increase your wealth like crazy, which has basically been the biggest wealth generator for me, which you'll see here when I'm going over my investments. And this one, like I said, 3-family, 1-bedroom and studio on the first floor. I used to live in the 1-bedroom, 2-bedroom upstairs, and I purchased this for $678,000 back in mid-2020, and now I owe $646,000 on my loan, which is a little bit of a decent spread from when I purchased it. And we want to figure out how much it costs now versus how much I owe to figure out how much equity I have in the property. And to do that, I'm actually just going to go on Redfin. I do not recommend using Redfin or Zillow, their estimates, to determine your property value, but this is just the easiest way for me to show you what it may be worth. I think for my 3-family, it's a lot lower, or not a lot lower, but a bit lower than it says it is on Redfin. And for my 2-family, I think it's a lot higher than it says. And the reason I don't really like these estimates is because they've never been inside your house. They don't know the updates that you've done. They're just taking a comparison of other homes nearby and looking at square footage and not too many other attributes other than that. So you can see here, bought it $678 back in May of 2020, and they estimated it at $745 at the time. The appraisal actually just came back as is at $678, which happens pretty frequently because the appraiser will have that contract in hand when they're appraising it. And over the course of the past year and a half, as you know, real estate has been super hot and it's increased on here up to $862. I think it's probably actually around $850 is a fair estimate. So looking at my loan, $464, we said, $465, actually $646, and I owe $850, which would amount to $204,000 of equity. And I only put $24,000 down, as well as an extra $20,000 into the property. So right now, that $204,000 of equity is a huge spread and return in terms of the amount of money that I put in. The next thing that I'm gonna talk about is the first property that I ever purchased, my duplex, also located very close to my 3-family, which helps a lot in terms of maintenance costs, figuring out contractors and good people to work with. Always good having your properties as close as possible to one another so you have less systems to worry about. But that's for a different video. But anyway, I bought this back in March of 2019 for $525,000, and it actually appraised for more. I know I said that typically the appraiser has the contract in hand and then they just take that amount, but this didn't happen in this case. They appraised it for more than it was worth, which is very cool. And since then, I've done a lot of work to it, fixed out the floors. I ended up having to do the roof. I did major heating systems. I upgraded the electrical. Basically, every major component of the home is now up to date, as well as I did some cosmetics. Those cosmetics weren't 100% perfect, but they're definitely very good for now, and I get in great rents from this property. So I purchased it at $525, and I actually refinanced it about a year later to get out of that FHA loan so that I could use it again. And that essentially just restarted my loan because I wrapped the closing costs into the loan. And right now I owe about $491, let's say $492 on the property. And it's increased a lot in value since. Again, the real estate market has been crazy for the last couple of years. And this one on Redfin, it shows it at around 700. My real estate agent said probably around 715. And actually one of my good friends, his duplex nearby, recently appraised for 750, and they have very similar specifications for both of those properties, his and mine. So it could be a lot more, but let's just say 715. So with that number, I'm at 715 minus 491, which would be around $224,000 in equity, which is a pretty cool amount of equity, especially considering I had only lived there for a year. Again, I put 3.5% down, $18,000. I did a lot of that work, as I mentioned, but it has increased a lot in value the return has been really high. And for both of these properties, I haven't even mentioned the cash flow, which does come in every single week, but I'm just talking purely about my investment portfolio and the amount of equity and assets that I have in total. Okay, and the last piece of property that I have that I don't really like to include in my net worth calculation because it's my primary residence, and typically people do not include their primary residence in their net worth because it's not something that's necessarily bringing them in money. This is a bit of a liability because I have to pay to live here. If you're looking at someone who's an accredited investor, they have to hit certain net worth requirements, and that's $1 million in net worth and making $200,000 or $300,000 a year, but they're not allowed to include their primary residence in that net worth calculation. So I don't include it for a number of reasons, but I have pumped a decent amount of money into this property. I bought it in May of this year, and it looks like it's increased a lot in value. Just looking at this Redfin estimate, actually my neighbor 2 doors down sold their house. It's only a 2-bed, 1-bath, a little bit smaller, no driveway or garage, and it sold for $415,000. I'm just 2 houses away. Like I said, I'm a 2-bed, 2-bath, a couple extra square feet, as well as I have a nice driveway and a detached garage. So that just gives you an idea of how much it could be worth. And I purchased it for $345,000. I definitely got some immediate equity when I purchased this building. I've done a ton of renovations, painted the entire outside, done the kitchen, done the bathroom, about to do all of the windows, brand new windows, and going to do the other bathroom. So it's going to increase a lot in value. And I put down 5%. So my mortgage is around $330,000. But again, I don't really like adding this to my calculation, so I'm not going to do the same for the others or include it in my net worth. But once I sell, or if I move out and rent out the place or something like that, happy to contribute it to my entire investment portfolio. But I would have more in the stock market or in my cash accounts or savings if it didn't go into this house. So I have put around $40,000, $45,000, including the down payment, into this property. And Mia is also in on it. My girlfriend, she wanted to get in on this property, so she has contributed a decent amount towards that $45,000 number. So again, I'm not going to include it here, but just an idea where some of my money has gone. Okay, and then that last thing that I want to talk about would be my cash account, so my savings as well as my checking account. Although cash is an asset, it's not a great asset because it typically depreciates in value. Especially this year, there's been a lot of inflation. So if you just had money sitting in your bank account, it has been losing value in the sense that your purchasing power has been lower. You've probably noticed going around that things like gas and groceries have really just increased in price. So every dollar that you have sitting there, not earning any type of money, is just decreasing in value. And here I have almost $42,000 in my high yield savings account. It's earning about 0.7% interest, so not nothing. And you may think this is a decent amount of money just sitting in savings. I have plenty for an emergency fund and far more than that. But the reason I have this is because I'm in the process of getting pre-approved and attempting to purchase my first Airbnb or short-term rental about an hour from where I am right now. So I need money for that, for the down payment, as well as furnishing and just getting it ready to be put on market. And I'm probably going to be saving a little bit more money over the next couple of months, hopefully get this account to around $60,000, so I have some good reserves and whatnot and feel strong about my cash reserves when I go to purchase that property. So instead of putting into other stocks or cryptocurrency that could definitely earn me more money at the time, I know that in the short term, I'm about to purchase a property. So I want to have this money readily available so that when the opportunity comes, I can make that offer and actually purchase the property. And actually, I've just forgotten that I didn't talk about my 401k retirement account with my work. I took a couple of screenshots, not going to screen record my work computer, but I have about $45,000 in there. That's a very simple thing to invest into. I have my Roth 401k as well as my traditional 401k, and I just allocate a couple of percentage points into both, as well as I get an employer match of up to the amount of percent that I put in. So I put in 5%. They also give me 5%, basically free money, and a majority of it is invested into the account. And vested just means that if I were to leave the company, I would still get it, because a lot of the time, if you don't stay at the company and they've matched money into your 401k plan, and say you leave after 6 months, they'll take a lot of that money back. But if you work there for a certain amount of time, that money's been vested and you've earned it because you've been loyal to the company, whatever. So that's an extra $45,000 into a retirement account, one that I don't really think about, just automatically comes out of my paycheck. And then back to the cash, I also have 3 bank accounts, one for each rental property that I have, as well as my own personal bank account. In my personal bank account, I keep around $2,000 in there at any given time, just to get me through weeks of expenses. Not that I spend $2,000 between paychecks, but it's just kind of been this imaginary number, arbitrary number that feels good to have in my checking account, so I do that. And then in each checking account for my rental properties, I keep $5,000 in there. If at any point I have expenses where that $5,000 amount in that bank account goes under that, then I just take less money from the cash flow each month. Normally I say I get about $1,100 from the duplex, but recently I've been able to take about $1,700, $1,800 instead, just because I'm at that $5,000 amount and haven't had many expenses. Similar with the 3-family, I say I get about $650 in cash flow, but recently I've been taking anywhere between $1,200 and $1,300 in cash flow for the last couple of months. So that $650 and that $1,100 in cash flow is just a moving average over the course of the entire time that I expect to own the property. So I'm gonna use my really fancy calculator in Google and just add up all of those. So I have my $20,000 cryptocurrency portfolio plus my $37,000 Vanguard portfolio, $45,000 in my retirement account, $41,000 in my savings, 2 from my checking, 5 and 5 from my other checking accounts. And let's see, I said I had $209,000 in equity at the duplex. And then I said I had $219,000 of equity in my 3-family. So that comes to $583,000 in my investment portfolio. Again, I also have this primary residence, but I'm not going to be including that in today's video or in the future just because of the reasons that I said before. So that's my entire portfolio. And if you appreciate my transparency throughout the video, looking at my accounts, and no, I'm not going to give you my account numbers, which is why I blurred them out through the entire video. But if you appreciate my transparency besides giving you my account numbers, make sure you give me a like on the video. I'd really appreciate it. If you feel inspired, I've definitely done my job and feel really good about putting this video out. And if that's the case, please hit that like button. It inspires me and helps me for that YouTube engagement. Don't forget to subscribe if I mentioned if you want to follow along, and hit that notification bell so you don't miss out on anything. And if you like me here, go ahead, check me out on Instagram or on TikTok. I also like to make short form videos that talk about the same type of topics. Thanks again for watching, and more wealth is coming your way.